EDM Resources has full ownership of the zinc, lead, and gypsum Scotia mine in Nova Scotia. The company is planning to be in full commercial production next year. Here to tell us more is the CEO and the president, along with being a director of EDM Resources, Mark Haywood. Good to see you, sir.
Thank you very much, Mark. Good to be here on Red Cloud.
So your Scotia mine is, you've got a mill, it's fully built, and you're aiming to be one of the lowest cost zinc producers in the world. So give us a brief overview for those who aren't familiar.
The mine, as you mentioned, is in Nova Scotia. It's very close to the Halifax airport, very close to ports, very close to logistics centres of Halifax. So logistics are excellent for the mine. It's been built, and we're refurbishing the mill to about $16 million to put it back into commercial production at the end of next year. So the land position is great. It's permitted to operations for about 8 years, and we'll be extending that to the 14-year mine life in due course. But it's funded now. It's funded to commercial production. So the beauty about this operation is that it's built. We have the loan in place to commercial production, and so we're about to pull the trigger on that.
Right, so this is the $24 million US that you raised, along with an offtake agreement with IXM of Switzerland. Now, we don't expect all the details, but what are some of the main factors and highlights of this arrangement?
The main thing is the credit agreement, $24 million US, which is today about 33 million Canadian, and our PFS determined that we needed $30 million Canadian. So we have a little bit of a buffer in there already in exchange rate, but with prices and inflation happening, that's impacted, of course, the operation and economics of the operation. So we're doing an internal review right now to see what that impact is. But essentially, it's funded to commercial production. So with that in mind, that's what the credit agreement is. And usual terms of business arrangement, it's a SOFR rate, which is the US, was a change from the LIBOR to SOFR.
Right.
I don't think you want to go into the details, but that's a very competitive rate. And although SOFR used to be below 1% earlier this year, it's now gone to just a little bit over 2%. So that's increased the payback term, if you like. When we did the arrangement with IXM, we were looking at about 15 months. It'd probably push it out another couple of months on that basis. But essentially, the agreement we have with IXM is the credit agreement, and we can't go into the detail of those terms because obviously they're confidential.
Right.
But very good terms. We negotiated with a number of different off-takers to get the best terms for the project, and that's what we ended up having. In exchange for that credit agreement, we established a commercial agreement for the sale of the concentrate, the zinc and lead concentrates, to IXM, and they are essentially our marketers. They will get the best price for it on using their worldwide distribution, and they're I think $25 billion under management last year. So huge revenue, very well established company, and they provided that loan to us. So, as I mentioned, we give them the offtake for an initial 10-year period. They have 100% rights to that, but we retain all the upside with working with the one offtaker. We looked at different scenarios, as you can imagine, when we're negotiating with a bunch of different offtakers and credit agreements and debt structures. So it was a very complicated process of essentially 2 years. So that's really the terms of the agreement we have with them.
Right, and you said it was a competitive process, and I guess in large part because you call this a once-in-a-lifetime opportunity.
Totally.
Now, you've got an updated pre-feasibility study that came out in November of last year. Some of the highlights here: the life of the mine, 14 years, as you mentioned, very low cost, an internal rate of return of 69%. So those are some highlights. Can you flesh it out for us?
Yep.
What else should investors know?
So the reason why I say once in a lifetime is because this is built. We've got the capital in place now, or the funding in place with IXM. The company is trading at 10% of its NAV, which is kind of unheard of. That's one of the opportunities we're telegraphing to our investors. This is a very unusual situation. So the opportunity for investors to come in, participate in the development of the company, if you like, or the asset, to commercial production, which is essentially 12 months away, that creates that once-in-a-lifetime opportunity. So the logistics, as I mentioned before, having the funding in place, the company we're starting to market because we have the commercial agreement. What we wanted to do is, until we had that in place, it was almost pointless to market, because the carry on from marketing is building the price up and people would ask, have you got the credit agreement in place? We say, oh, no, not yet, we're working on it, which is, as I mentioned, a two-year process. So we wanted that in place, and now that we've obviously engaged with Red Cloud and working on the marketing aspect of it. So that has been the game changer, and that's really why it's once in a lifetime opportunity as we see it. And you well know that there's the board and management have about 30% of the current share offering, or shares issued and outstanding, right. and the balance of that is essentially investors that we came in when I came in the last 3 years. So we have a big group of very savvy investors who I think like the story, and they also see that this is a very compelling opportunity, the opportunity to take it from a 10% of NAV to closer to the 100%, even at a discount of 8%, which is the internal rate of return that you mentioned, of 60, 65, 69%.
Right.
It depends on what I guess zinc price and lead price and gypsum price we apply to that. But that's a pretty conservative number. So there's a lot of upside for the project because it is a 14-year mine life, and we're working diligently to reduce some of our costs on it to make the cash costs or the all-in sustaining costs even more, even lower, if you like, and even more competitive in the marketplace.
And part of the appeal, as you say, for investors is that it's a near-term project. You're planning to start mining Q2, Q3 of next year,
Yep.
production in Q4. Can
Yep.
you take us through the timeline from here to there?
For the rest of this year now, we're focused on completing a contingency funding of about $5 million, and that can be flowed through Canadian Development Expenditure, or CDE, that we're working on now with a couple of different base rate groups. We expect that to be completed by the end of the year. That is one of the key condition precedents, if you like, for drawing down starting to draw down the loan from Mike's.
Right. Sorry, so just interrupt there. Are you finding market conditions tricky or difficult, or not really, because it's an appealing project? That's not the case.
It is an appealing project, as you say, but the markets are atrocious. We're in a bear market, so we had a bunch of brokers that, oh yes, we love it, and then, oh, we can't do any deals right now. But there is that compelling nature of the project being very close to commercial production, which changes the game for a lot of interested parties out there, because we are within 9 to 12 months of commercial production. So if we push the trigger, like essentially this year, at the end of this year, then we'll be in commercial production within 9 months to 12 months. So that would be essentially Q4 of next year. So that means that we're on a path to actually revenue pretty quickly, which changes again the milestones of the company. And so the credit agreement, or going back further, we upgraded the resources. We had the first ever 43-101 mineral reserves for the project. We completed 2 PFS studies by independent groups, and they were just very positive, very robust economics. And the credit agreement was essentially the last component of fixing the project. And now it's the capital markets, as I said, it's kind of atrocious. But for our project, we've got a lot of interest, and people see that, especially with the flow-through or hard dollar financing opportunity. I think we've got the opportunity to complete that at the end of this year, which would mean that then we can commence mining in Q2, Q3 next year, summer, in Nova Scotia, which is excellent operating conditions. And during that period, we will be refurbishing the mill, which is about $16 million, going into the upgrade of the mill, new crushing circuit or crushers, and upgrading the facilities that haven't really been touched for in terms of modern technology. So that's going into the plant. And that would mean that we've essentially got a plant that has a low risk of producing the concentrate for a long period of time. We have sustaining capital on top of that. So we've kind of de-risked the project, and that's essentially changed the game and brought in a lot of interest, not only from the off-takers, but I think from the street as well. And so that's why we're pretty confident that we'll have the funding either at the end of this year or like soon after, and then we'll be able to push the trigger.
Now, Mark, you're modeling $1.22 a pound for zinc. The price is above that right now. How do the economics of the project change if zinc persistently remains above 122, if not substantially higher than that?
Yeah. So the 122 pound, US dollars a pound, is a pretty conservative number, especially considering it's a 14-year mine life. And so even like last year, we had $2 a pound for zinc. So it's come down with a lot of different factors in the world right now. And so right now, when we look at our PFS and $1.22, the market's projecting a lot higher numbers from that 2023, 2024, when we're starting to operate. It's well above $1.30. So we're kind of making a real good margin because our all-in sustaining cost is around about 52 cents. So although it's a little bit higher in the first year due to stripping, we're actually making 40 to 60 cents revenue, or margin, if you like, profit margin, in the first couple of years. So that's pretty robust economics. So we don't expect the zinc price to drop down to 60 cents or even 80 cents. So this is going to be in production. If you like, in the first 3 years, we make $55 million free cash flow. So that pays back the loan. It hires a lot of people from Nova Scotia. There's about 150 full-time workers plus at the mine, plus all the indirect groups there. So we feel that the $1.22 is pretty conservative. If you just run the long-term averages now, the $1.26 or even just $1.40, the internal rate of return jumps enormously. You're in the 70s, you're in the 80s in terms of the return. Payback is faster. So that's why I say it's a very robust project. The economics are very strong. We've got a great local workforce that we can tap into. We've hired some excellent people already. So it's all moving in the right direction.
And lastly, Mark, with the stock, you mentioned it's trading around 10% of net asset value. You say the market's atrocious, but would you say that the three things investors should look at, and you've been touching on this, it's near term, it's low cost, and the margins are very healthy and robust, as you say.
Yep, and we're permitted. So the mine is permitted, which is the key thing in Canada. We're in Tier 1 jurisdiction, so that means a lot in terms of where the world is today. Nova Scotia has been excellent in terms of the government response and our focus on moving the project forward. It means a lot for revenue for the government of Canada and also for the provincial government as well in terms of taxes and things like that. So it has all the hallmarks of being one of Canada's lovely mining operations that is supported by the community, supported by First Nations, and of course supported by the government and our shareholders, stakeholders if you like in general.
Well, thank you for your time today. Thanks for the information.
Thank you, Mark.
And learning about the story, and we'll see you down the road.
Been a pleasure. Thank you.
Okay, Mark Haywood, thanks. Good stuff. Mark Haywood, the CEO of EDM Resources. Thanks a lot for joining us today, and we'll talk to you next time.